Hi, and welcome back to another options newbie tutorial. So, in my last video, I covered calls and puts, and I think I sort of focused more on the call side of things. So, in this video, I'm just going to concentrate on just puts itself because I glossed over puts, but I think I missed a few important things on puts. So again, this is just going to cover long puts. Okay. So, so basically, what is a put, right? So it gives the buyer the right to sell a stock at the strike price, but not the obligation to sell within a specific period of time. So, the expiration date on here. Okay. So, so when would you use a put? So obviously, if you're bearish on the stock, so if you think the stock is going to go down, right? If there's a stock at $50, but you think it's overvalued, maybe you only think it's worth $40 or $30, right? That's when you would buy a put because it's giving you the right to sell that stock at a price, right? So if you're selling at 50 and then buying back at say like 40, right? That's where you're going to to make your money. So the put will increase in value as that stock goes down. Okay, and now puts, they can also be used. Long puts can also be used as a hedge. So if you're long the stock, again, if you own a $50 stock and say you buy a $45 put, right? It's going to protect you on the downside on there. It's like paying an insurance premium, right? So if your stock goes down to $30, well, that put is going to have that $15 value built into it if you buy the 45 strike. So even though your long stock that you own has gone down to that, right? You are somewhat, you are protected from from a lot of that loss on there because, like I said, because that put is going to increase in value in that instance. And again, you have to think, you know, it can be expensive, right? Because if you're buying that that put on your long stocks, every month, every couple of months, whichever, right? That is eventually going to get really expensive. So that's of course with the downside to hedging. It does it does cost you quite a bit more on there, but like I say, it does protect you at the same time. So expiration of a put. So what happens at expiration? Essentially, uh, if the put is in the money and you do not sell the put, then you will sell the stock. So if you don't own the stock, you are essentially going short the stock, right? So when you're short selling, you're basically borrowing stock on there to, you know. So if you short sell a stock at $50 and it goes down to $40, you eventually have to buy it back, right? So of course you buy it back at 40, you make that difference of $10 on there, right? So if you're now a couple things to keep in mind, you cannot have a short position in a registered account. So if you're Canadian, you cannot have it in your RSP account. If you're American, you can't have it in your IRA account. Okay, it has to be in a margin account. You have to have a margin account in order to do that. Okay, because again, short positions just aren't allowed in retirement accounts. So just kind of keep that in mind. If you do have a put and you intend on exercising it on there, all right. Um, so of course, you can sell the put at any time up until expiration as well. Okay. So an example, just a quick little example. Again, this is not a recommendation. I just sort of, I just picked the stock randomly. Okay. So take GoPro as an example here. So as of the 29th of September, closed at $11.01, and let's just say I want to buy I want to buy maybe the 38 sorry the $10.50 put. It's at like 38 cents. So that is going to put my my basically my break-even point is $10.12. So I'm saying that between now and October 20th, I think that the stock will go down below $10.12, and then I can either exercise it and short the stock at that point, or just simply sell my my put options. Now, again, just for educational purposes on this one, just to show you. So 38 cents, of course, 10 contracts, right? Contract is 100 shares each one. So if you're looking at that 10 contracts, you're multiplying it by 1,000, giving you $380 that you're paying on that. So anyways, I just wanted to concentrate just on the on the long puts. It's a bit of a shorter video. I think my next video I'm going to do covered calls and cash covered puts. Okay, so I'll save that for the next one. I hope to have it up in the next few days on there. But yeah, I mean, if you like this video, if you find it useful, please give me a thumbs up or subscribe. Again, welcome any of your comments, suggestions, anything you want to see on future videos. Okay, and see what I can do on there. Anyways, thank you for listening, and bye for now.